سادة الحضور، سوف تبدأ الآن الجلسة الثالثة بعنوان التكنولوجيا، الابتكار والتحول الرقمي في الأسواق المالية. يسرني دعوة السيد وولفغانغ إنجيل لإدارة الجلسة، والمتحدثون فيها هم السيدة إليزابيث واليس، السيد أحمد الكسواني، السيدة ميرنا سليمان، السيد جون تيرنر. نطلب من السادة المتحدثين التكرم بالصعود إلى المنصة.
Good afternoon and welcome to our session number 3, Technology, Key Drivers for Capital Markets Transformation and Development. My name is Wolfgang Engel. I'm the General Manager and Chief Representative of the IIF Regional Office here, and I'm delighted to introduce a fantastic panel which is going to be discussing these topics. The colleague already introduced my panelists here, but let me briefly say Myrna Sleiman, founder and CEO of FinTech Galaxy, which is an open innovation platform. Elizabeth Wolf, the director at the DFSA and the head of conduct and innovation policy at the DFSA. And as you know, the DFSA is the regulator of the well-known DIFC. Ahmed Al-Kiswani, partner at PwC and head of the firm's financial and banking services sector in the region. And last but not least, John Turner. He is CEO of XBRL International, a firm that has developed and that is managing the XBRL standard, and I think we'll hear a little bit more about it in a second. So what are the drivers for capital market transformations, and what role does technology play? What is the role of artificial intelligence? We heard it already this morning. Blockchain's impact. What are the regulatory challenges and the solution that accompany these advancements? In recent years, the landscape of capital markets has been undergoing substantial transformation, driven primarily by advancements in technology. From algorithmic trading to digital platforms, technology has not only streamlined processes, but it has also revolutionized the way capital flows through the system. One of the key drivers undoubtedly is artificial intelligence. It's clearly a game changer in optimizing decision-making and also risk management purposes by analyzing huge amounts of data. Blockchain technology has emerged as a disruptive force, offering decentralized solutions also for asset ownership, for trading, and for settlement. However, with all these advancements comes a new set of risk and also regulatory changes. As we navigate through this digital revolution, regulators face a difficult task. They have to strike a balance between supporting innovation on one hand and safeguarding market integrity and investor protection on the other side. Our panel will discuss these issues and will also explore the technological innovation driving the transformation. We'll also look at regulatory considerations and solutions which are important for navigating the new landscape. Minna, let me ask you the first question. You are an expert. You have been involved in fintech and in financial technology, in open banking and open financing for many years. From your perspective, where do you see the largest opportunities for capital markets development and also for transformation?
Thank you for the question, and hi everyone. So where I come from will give you a different view from where bankers probably will come from, and different from where brokerage firms or other market participants. So I'm going to speak from an innovator, fintech, third-party provider kind of a perspective. The past 5 years has seen a huge change in the way we look at the markets. And I remember when we used to speak about fintech, innovation, transformation, disruption, all of that, regulators were like, no, that's not our job. We're here to preserve the system, and we're here to make sure that the fiscal policy, monetary policy are all reserved. And then later on, they realized that actually the market is driving the change. It's not an option anymore. So what happened is we started looking at how the consumer being at the center of the whole ecosystem is actually driving this change. So it's not technology that's driving a change at a financial or banking or capital markets perspective. It's the consumer behavior that's driving that. And it's up to the regulator or the executive to either react and just do firefighting, or put the systems, platforms, regulations in place to start coping, and even in some cases spearheading this change. So first of all, the consumer is becoming much more sophisticated. Our kids today and this generation that's coming, they don't like to go to the trading platform and scream with a piece of paper. I remember when I was a journalist 10 years ago, I was 15 years old. I used to go and report on capital markets and trading, and I used to actually meet people on the ground screaming for shares, and they once kicked me out from the Dubai financial market because I'm distracting the traders as a female. Look at where we are now. We don't even meet each other. We trade using robo-advisory and all of that. So the consumer is changing, the behavior is changing, and the technology is driving everything into whole different levels. So now the robot and the AI is actually looking at analyzing your behavior as an investor or as a retailer, and they're giving you suggestions on how to manage your money and how to do that. So the regulators are catching up, and I mean, I know Dr. Muhammad, we've met in few situations, and you can see Egypt is trying to actually, because of the talent and because of the opportunity and the size of the market, in some cases you're ahead of the market, and in some cases you're trying to catch up. But it's that kind of a balance that we need to put in place. We can't allow one segment to go ahead of the other. And the other thing that is that's also happening is data is no longer valuable as it is. I used to work at Thomson Reuters, and we had terabytes and zillions of data, and if you don't do anything with it, it will die. And this is the value from open banking, and I'll talk about open banking later on, but using data to come up with wisdom and decision-making, using technology that can enable you to act fast, even at a regulatory perspective, by the way, this is the future.
That brings me to you, Ahmed. You have been covering banks, financial institutions, asset managers for many years, and you have also been advising regulators and central banks on market developments. Everybody is talking about artificial intelligence. Outside this forum, we heard it earlier, everybody is talking about using ChatGPT or Microsoft's Copilot. What does that actually mean? Can you let us know some practical and pragmatic use cases, and also highlight the risks and also the opportunities?
Sure, thank you very much. I think the subject of artificial intelligence has been emerging a lot within the last few years, actually, but I think until now we are still not focusing on the practical use cases that needs to be there, and how specifically we can come into the practice when it comes to the capital market, actually. And if you'd like to be more practical, I would like to share with the audience maybe 2 to 3 use cases that I can see them effective enough to think about and to see how this can be practical and easy to implement, as some of the quick ones can be in the capital market. I'm going to start with the AI capabilities that currently is implemented in terms of the data quality and the data cleansing. And as my colleague, she mentioned about the data is still like one of the very important subjects that is important to capital market and financial institutions. But one of the key challenges that these data, either they are scattered, there's a lot of silos in the data, there's a lot of like quality issues in the data itself. And one of the practical use cases that we are seeing now in the market is basically how we could deploy the AI capabilities in terms of data cleansing, data classification, and data categorization into a proper data catalogs that can be utilized by the stakeholders within the capital market itself. And when I say the data categorization is basically information and data related to stakeholders' information, either on the disclosure side, financial and non-financial area. So one of the capabilities now is how we could utilize the AI to do a proper data classification and data analysis. And the data cleansing is very important. We saw a lot of use cases where we have a lot of data, but the data is not classified and cleaned enough to be utilized for a proper utilization across the capital market. The second capabilities that we are exploring right now in most of the financial institutions is the AI capabilities in supporting the on-site and off-site supervision when it comes to the capital markets authorities and to the stock markets itself. We saw a lot of like examples in terms of automating these the supervision framework, or like looking after the ongoing market surveillance and other stuff. But now there is also some of the AI capabilities that are related to analyzing some of the scenarios that can be there in terms of the day-to-day trades that's happening, and some of these AI can give like an immediate alerts of some of these let's say cases that can happen on a daily basis. In addition to that, some of the capabilities of AI related to the early warning signals, and this is a very important subject, especially after the high uncertainty that we are seeing now in the market, especially after the COVID. Everyone is talking about the uncertainty and what can be done. So from a practical point of view, most of the capital markets and institutions are thinking about what we can enhance in terms of AI capabilities to give us more clearance about our predictions and the future alerts that can be there, especially with that high level of uncertainty that we are seeing. And these EWS, early warning signals, can be linked to the market risk as well, credit risk, financial risk, operational risk, and many other risks that are related to the listed companies. And we have been practicing these use cases across several markets when it comes to the early warning signals that can give alerts to the investors in advance about what could go wrong in the future in terms of the impact on a certain shares, or any impact on the dividends, or whatever that can be happen in terms of the capital market itself. And this, by the way, is evolving. Again, the AI, it's like a learning machine. So whenever you have more information and more data and more usage, it gets more utilized and explained. And then the third AI capabilities is basically in the reporting side, and basically to what extent capital markets and stakeholders can enhance the MIS, the Management Information System reportings, shifting it from the classical, let's say, automation of these reports into a more digitized and on-the-spot information that can be there. And I can share with the audience some of these practical, let's say, tools that currently is used in terms of the dashboarding and reporting, such as the Microsoft Power BI, the Tableaus, the Alteryx. All of these are like some of the practical tools that currently can be shifting the reporting methodology from the classical approach of like Microsoft Power BI. It's something that give you like a very practical, clear dashboard that it's live information that you can utilize it on a timely basis. And that's a new generation of reporting, shifting from the classical PowerPoints, Excel sheets, etc., into a more, let's say, live information that can be utilized using the AI. These are some of the examples I would like to share with the audience in terms of the practical use of these AIs that currently we are seeing in the market. Maybe the banking sector has been utilizing these more frequently than the capital markets entities, but now we can see more development happening in that area, and I think this will emerge a lot within the coming period of time, especially with the demand of having a more on-the-spot information that can be utilized by the stakeholders.
Elizabeth, we said that the DFSA is the regulator of the well-established financial center DIFC. And as far as products and markets are concerned, DFSC is pretty well diversified. Let's now take a look at the quote-unquote new assets, crypto assets, digital assets. From a regulatory and supervisory perspective, what are the challenges and what role do you think they play in terms of capital market or market development?
Okay, thank you very much. And also thank you to the Qatar Financial Markets Authority and the Union of Arab Securities Authorities for having us here. I think there are a lot of challenges that we've faced. We introduced a regime for crypto tokens, as we call them, back in 2022. There have been a lot of challenges as we've implemented that regime. First of all, I think there's market understanding. Typically, the firms we've seen in this sector, they're familiar with technology. They're not necessarily familiar with regulation, and they're not necessarily familiar with terms around risk management, corporate governance, and a few others. And that's not to be aggressive about that, but they're just not talking the same language that regulators talk. So we've had to do a lot to educate them about regulation. And coming back to what Myrna said, a couple of years ago, perhaps regulators wouldn't have taken on that role. But now we've had to work with the industry more closely and explain what we want from them and how we want to obtain that information. We've held quite a lot of workshops, webinars. We've provided different types of explainers about how our regulation works and, again, what we want to see from the market. Something that we haven't really talked about today a lot is around talent, and that's both in the regulator and also in the market. I'm not saying that regulators need to know everything. They don't need to know how to code. They may not need to know how distributed ledger technology works, but they need to know about the terms being used and the products and services being offered. So we've spent a lot of time upskilling our staff in various areas, and that is going really well, and we'll continue to do that because the market is always evolving. And then I point to around talent in firms. They're looking for the right compliance people to meet our requirements, but there are not a lot of people out there that have a lot of experience in this area. So again, we're seeing a build of talent across the market. And then terminology. We've talked about crypto assets. We refer to crypto tokens. The FATF refers to virtual assets. There's a range of terminology being used in the market, and that can make it quite challenging for firms to understand what we're talking about and how we apply our regulation to that. But a theme that I've noticed coming out of discussions this morning is around further engagement. And our learnings from a lot of things in this area is how regulators can work together because this is a cross-border activity. It's global. We need to learn from each other and we need to work together more. And we also need to work with the market. Some of the products and services being offered are very new. We need to learn from the market about them before we consider where the risks might be and how we regulate and supervise those particular products. And then in terms of our learnings from licensing and supervision, we haven't reinvented the wheel. I think a lot of us would know that we've got good policies and procedures in place. We know how to license firms, we know how to supervise firms, but we've had to look at it from a slightly different angle. And that again comes back to how the firms understand our approach to regulation and how we obtain the right policies and procedures for them.
John, XBRL International, your company has developed and is managing the XBRL standard. Your firm is also focusing on a range of questions associated with the digitization of sustainability disclosures. And that, of course, excuse me, brings us to the question of standards, a topic which also our colleagues discussed earlier. When we look at sustainability disclosure standards, we see differences between jurisdictions, just Europe and the US as one example. The path to net zero will be difficult if we don't agree on standards on taxonomy. From your perspective, what is the impact of a standard, of market standards, for the development of markets?
Thank you very much, and thank you to the organisers for the opportunity to be here and speak today. We have a very short video that might help put some of this into context, which I think we could bring up in just a second. For those of you unfamiliar with what XBRL is, this is a global standard for digitisation of reporting, but it's a global standard for reporting digitisation of any kind of reporting. So if you like, what we do at XBRL International, we're a global not-for-profit with a public interest purpose. Our standards are used by more than 210 regulatory mandates around the world, and we only measure mandates because if you invite people to voluntarily disclose things, they tend not to. But that process is one of providing, if you like, an alphabet and grammar that's a global alphabet and grammar. Everybody has to use that. We then provide an opportunity for regulators and standard setters to define taxonomies or dictionaries, and this is where the question of comparability comes in, and we'll come back to that in a moment. And then companies report using the words in the dictionary and the alphabet and grammar. Can we get the video up just for a second? I'm just not sure where I'm looking. There we are. Here we go. So this is XBRL in action. If you've not seen XBRL, this is an example. It just looks like a report, looks like a PDF, right? Actually, this is a web page. And if we scroll down to, in this case, some financial information, we might look at the financial statements. Let's look at the statement of consolidated income. Scroll down to there and you click on one of these numbers. This information has been tagged by the company. It's using the IFRS taxonomy, so this is the IFRS standard, and there's a range of information there. When you've got a lot of that information, you can run analytics, whether you're using Tableau, this is Jet Tableau, or any other kind of analytics, including AI, you can do an awful lot of it. This is an example of the kinds of things that regulators do. Let's look at the healthy interest cover for this set of companies. Let's look at UK companies that seem to be going quite well in terms of their debt coverage. And then, if we want to, we can drill down to a specific company. This is the kind of thing that regulators are moving towards, and of course that market participants use to a very large extent. They're consuming the digital information, they're not rekeying information anymore, and they're not necessarily reading from cover to cover a 200-page report. They're looking at the information that they're most interested in. So let's look at that from a couple of perspectives. One, we have a global change, a really radical shift from a voluntary environment of sustainability disclosure to an increasingly mandatory framework. An ISSB baseline, but it's not quite yet the only show in town, and we're working through that around the world. But increasingly, data providers and investors want that information, they want it immediately, and they want it in a digital form. So as we see adoption around the world, in Europe as well as in the United States and in a huge number of countries, I guess particularly in Asia, that are moving towards mandatory digital disclosure of their sustainability materials, this is a new wealth of information that regulators can utilise and leverage in combination with the financial information. These corporate reports, often people say, oh, well, why do we need to worry about corporate reports so much? There's lots of other alternative information out there. We might be interested in a range of other measures. But financial disclosures are a fundamental part of understanding, a fundamental part of trust. And indeed, it's in the simple terms, they're often the denominator of lots of financial metrics, non-financial metrics. And combining both the sustainability disclosures and the financial disclosures is the next challenge in this area. For regulators, this means being on top of that. This means being able to understand the steps that they need to take. There's a lot of activity in terms of XBRL adoption across the region. In financial sphere, we'll see what happens in terms of sustainability as we go forward. But that process is not just a one-way step. It's not a case of, company, please provide this information in a digital form and we'll let the market use that information. Regulators need to leverage that information as well. There's a very real opportunity for regulators to do a lot in collaboration, to learn from each other what they're doing in terms of their analytics. There's a host of information that hasn't been available in the past. So that process is a very important process. At XBRL International, we are working with the ISSB, with EFRAG, with the US SEC to try to ensure consistent application of the XBRL framework in their dictionaries, in their taxonomies, to enhance comparability. There's been a lot of very good work in that area over the last 2 years with very close collaboration around the world in that area, but there is more to do, particularly in terms of ensuring that investors and regulators are able to compare information across jurisdictions. So stay tuned in that area. We'll have more about that as we go forward. But the idea of doing things on a paper basis, it's 2024, not 1924. If we're not working in a digital environment, we're really not as relevant as we need to be. So XBRL International sits as a standard setter, but we work with regulators right around the world. We work with many of you today. We're happy to work with the rest of you to bring reporting, whether it be financial or non-financial reporting, into a digital age. So perhaps that's a little intro, but we can talk maybe about the impact of AI in this area as we go forward.
Thank you. Mirna, when we talk about capital markets development, we also need to talk about data. And there is clearly a need for disclosure, and there is an even bigger need for reliable data and the availability of reliable data. In many countries, also including in our areas, we are facing limitations on the free flow of data. And many institutions which are active across countries are facing data localization requirements and issues. From your perspective, what do we need to do to overcome these obstacles?
That's a good question as a segue to talk about open banking and open finance, because it's now becoming, there's a hype in the market. And I don't know how much you know about open finance, but let me just give you a quick brief. So historically, the customer data is owned by the bank or by the insurance company or the brokerage company. And then regulations in Europe, PSD2 and UK gave back the ownership of that data back to the customer. Okay, so the customer actually owns that data. It's no longer the bank and no longer the institution. Now the customer can share this data using consent management. So the customer can actually consent to sharing his or her data with other institutions in a certain jurisdiction based on a set of standards and principles and regulations that are called open banking. Okay, so that's open banking. The other part of open banking is payment, which is account to account without any middleware, so or rails or whatever. So from my IBAN to another IBAN, I can do transfer. It's cheaper and it's faster. And of course, you can do merchant payments, you can do whatever. So open banking is AIS and PIS, which is Account Information Services and Payment Initiation Services. Now, that gives access to data to the market. Now, who controls that flow of data? They're called TPPs, third-party providers, and these companies are actually licensed. They're regulated, strictly regulated. So it's not like it's a loose cannon. No, they're actually regulated by central banks. We at Fintech Galaxy, we are regulated in Bahrain as a TPP. We're getting regulated in Saudi Arabia. we just applied for the sandbox in Jordan. We're getting regulated in UAE by the central bank. So every market that brings open banking regulations, we go and get that license. What does that enable us to do? We plug into the bank's APIs, and I'm going to explain what an API is, because I always get that question. And then we take that data, we put it in an engine that gives it a form or a shape. A simple use case, you mentioned, Ahmed, a lot of use cases, but one of the use cases is you have 5 bank accounts. So every time you want to check your balance, savings or current, you have to open different apps. PFM, which is a personal financial management app, actually brings all your bank account data into one screen. Okay, so I can see all my accounts in one screen, and then I know where my financial health, and then you use AI, which is loosely sometimes used, but AI needs millions of data sets. Guys, don't assume that I have an AI and I can do magic. No, you cannot do anything with AI, because most of what we see and we think is AI is not AI. It's just some algorithms that they put, very basic. AI needs a lot of data, and you put that data in an engine and it gives you some historical wisdom that you can use. The API is, you know, the mobile phones, when you charge, there are different types of charge. I mean, I think there are universally 3 types of charges. Okay, the USB-C type or whatever. So regulators need to define the principles of how APIs talk to each other. Otherwise, how would I connect to a bank? Okay, so that's the role of a regulator. Now, when I go beyond banking, I start getting capital markets data. So imagine on my application, I know where my bank accounts sit, and I know how much I've invested in the, the DFM or EGX or Qatar Stock Exchange or whatever. I know my pension position, I know my insurance position, so all of that in one screen. This is open finance, okay? So regulators need to regulate this activity and need to actually put standards into that, so that later on, the technology can do its job. A technology without regulations, without standards, can actually mess up the system and can create a lot of problems out there. So in the region now, Bahrain regulates open finance. Saudi Arabia has data regulations, not yet payments. UAE 2 days ago issued the open finance regulations, so super excited about the UAE. I'm going to Amman on Sunday to meet with the CBJ. They're preparing for the regulations as well. Oman, I think Qatar has some consultancy going on. I still wear the journalism hat when I need to. But one thing I want to mention before I close this part is we all learn. It's not a bad thing for a regulator to see, I want to learn, come and teach me, or let's sit together and learn together. It's very important. We run workshops, and these are usually non-paid workshops, so we just run them just to create, because if regulators understand the market will move fast. And if you think that asking a fintech, like Fintech Galaxy, to sit in your sandbox for 6 months, it's a cool thing, this 6 months costs me $2 million minimum. So please, just like we as fintechs and as players understand how regulators think and we feel your pain, try to feel the pain of the innovators who are sitting there waiting for al-wahi so that a regulator gives us a license. Thank you.
John, that brings me back to you. Your firm is globally active. You mentioned that you have clients all over the world pretty much. Data localization is an issue for your clients. How do you help them basically to overcome these problems? Because on the other hand, you're also suggesting to use AI actively as a provider of services.
So, as I said before, we're just the standard setter. We provide a framework and let people utilize it, and people have leveraged it in extremely creative ways. There's not just financial disclosures, sustainability disclosures, there's tax, there's statistics, there's energy, there's water, there's a range of very interesting efforts on things like measuring almost in real time the activities of investee companies by in a sovereign wealth fund, for example. That's in Asia. So this is just a toolbox that people can apply in different ways. What we're seeing, though, is that when you have an obligation by a regulator to provide a digital disclosure, that's a set of accountability imposed on management that provides extremely high quality information to the market and to the regulator. It provides not just tagged information, but those definitions. Now that's like gold dust for artificial intelligence. AI needs a lot of information, as you've said, but if you can provide what we technically call the semantics, the meaning behind data, as well as the data, you're providing extremely high quality information. Well, what does that mean? It's a little bit early. We all know that LLMs and other advanced AIs still have a tendency to hallucinate, but the world is working through a lot of those issues. But as we go forward, very difficult to work out the timing on this because this is moving so quickly. It might be 3 years, it might be 6 months. But as we move forward, we think that every piece of structured information in the world is going to be looked at by a host of competing AIs that are trying to come up with insights. What does that mean? Well, we suspect it probably means new kinds of financial products, because the reality is that within listed environments there are significant numbers of companies that don't attract as many investors as they would like. They may not be as liquid as is required, but there is different approaches to providing access to those opportunities, and these tools mean that all of this information that might never have been surfaced or very surfaced in a very light way will suddenly be front and centre. It may well be an opportunity for regulators to think through other issues, like how do we provide greater access to private companies to public investors. That's a hoary chestnut, a difficult problem, but we really need to think about the scale at which AI can operate, creating entirely new opportunities and new ways of thinking. The digitization of that reporting is just one aspect of that, but it's a very important one. It's kind of a baseline, and this is just plumbing, but if you don't have plumbing, your shower doesn't work. So we encourage people to make sure their showers are working with having that digital plumbing to open up some of these new opportunities, which innovators, entrepreneurs, and regulators are going to start to leverage in a very substantial way. There are multitudes of organisations working on, how can we provide AI tools for auditors to be able to understand things that were very difficult to do, required a lot of technical expertise previously, but before long we'll be able to ask natural language questions. Same for investors, same for regulators. How can those natural language questions then be turned into analytics of the sort that we just saw? So this is a very important, very exciting time for this field. I would emphasise the need for regulators to be communicating about this and to be collaborating on what's possible and indeed maybe some of the nuts and bolts of how to do this stuff.
Ahmed, excuse me. In our region, we are noticing that there is a shift away from the banking book to capital markets. And there are different reasons. Clearly, banks want to reduce their risk concentration. And on the other side, we are also at the same time, we are noticing that central banks and capital market authorities are competing with each other to introduce the latest trends in fintech. What are the practical solutions for the development of capital markets, and how should countries capitalize on these trends?
Yeah, thanks for this. So basically, if we would like to look to the banks in the region, I think all of us witnessed the increase of the cost of funding and the increase that happens recently on the interest rates in general, and that makes a lot of pressures on most of the financial institutions. in deploying these funds, and what can be the other solutions that can be explored by the financial institutions in terms of deploying these funds with the high returns as well. And with that challenge, actually, there should be like a more collaboration between the regulators, between central banks and capital markets authority in general, in order to enhance the diversity of the investment books. If you look to any balance sheet of any of the bank, you will find still until now in the region, actually including GCC and the other Middle East countries like in Jordan, in Egypt, in North Africa, still most of the banks, they have a high concentration in their banking book compared to their investment book actually. And that concentration is coming basically from the opportunity that the bank used to have in terms of the credit and the financing opportunities that there were more clearer to them than the investment opportunities. And if you look to the most of the financial statements and the balance sheets of the banks, you will still find in their investment books the same classical investment products that they used to do it for the last 30, 40 years in their books actually. I think now there is a big demand of start looking into a diversity of the investment products, where I think a collaboration can happen between capital markets authorities and central banks by introducing a new and more modern financial technology products, where can provide a more variety and more diversity for the banks in terms of diversifying their financial statements and their balance sheet, but at the same time provide more options for their customers in terms of, my colleague, she was talking about open banking, and open banking is not only about the eKYC and linking the accounts, but also about how you can have a financial inclusion, we call it, across the markets by having different diversity of the banking products and investment products that are can be deployed. And if I want to put some examples on this, I think there is some of the markets actually globally, they start introducing more fintech products that can be more liquid and more easy to the investors to have an access to utilize their funds. Some of the digital tools that has been introduced and regulated by the capital markets authorities and the central banks in terms of robo-advisories or in terms of any other Gen AI capabilities that can diversify the investment products and can provide more flexibility in terms of liquidity and in terms of better returns for the investors. So that the collaboration is a must. But just to comment on what my colleague was mentioning about the AI as well, since this conference talking about the AI and talk about the investment, I think there is a responsibility on the regulators to build up the infrastructure itself and to elevate the level of the culture that we have it so far. We can keep talking about the AI capabilities and the technology, but if the culture is still not enhanced and the infrastructure is not built enough to fulfill that these requirements, I think we will not be achieving the objective that we're trying to do. And I'm going to leave it until the end of this session or this panel to provide some of the takeaways and recommendations. Maybe I'm sure my colleagues here, they will be having also some other recommendations to the regulators. But basically, I think the investment books in general in financial institutions needs to be elevated, needs to be enhanced, and needs to be transformed. Some of the challenges that are facing the banks and the financial institutions that I'm working with, the strict regulations, the long cycle of approvals and licensing, which my colleague as well, she highlighted some of them. Still some of the sandboxes and the other regulated requirements are still complicated, so there is some bureaucracy of approvals and the cycle of getting license for certain areas. So building up the infrastructure, enhancing the culture itself, smoothing the approvals and the licensing, it becomes like a need and a requirement that regulators have to think about it. I just want to give one of the examples of one of the regulators that I dealt with, not in this region, but in the other regions as well. The target for that regulated entity was to make it more smooth and more easy to the entities to get license. And the challenge was how they can finalize a process within 3 minutes, and 1 minute to apply, and 1 minute to approve, and 1 minute to process. And what was one of the challenges that achieved actually by that entity in 3 minutes to apply for something, get it approved and get it processed by having a more AI capabilities that can be there, instead of having a long cycle of applying for an application, waiting approval, getting signatures, and waiting for long-term, let's say, negotiations and discussions with the entity. So I think here in this conference, one of the takeaways or some of the things that we need to recommend is basically how we can, as regulators or key stakeholders or advisors, expedite the process, simplify the cycle itself, and creating more collaboration between the regulators where we can add value and benefits to the stakeholders as well.
Thank you. The chairman asked us to be on time, and so that brings me to my last question here. When we look at the success factors for capital market developments, clearly liquidity, size is one of the factors. On the negative side is its fragmentation. When we look at other parts of the world, we clearly see that there is the desire for capital market integration. My last question to all of you is, and I would like to ask you to respond briefly, how do you see the chances for capital market integration in our region? Is it going to happen? When will it happen? John, we start with you, since you were pointing at Elizabeth.
Thank you for the question. I think this is it's a question of survival to a certain extent. There is no future in entirely fragmented, disjointed frameworks. Doesn't mean that there needs to be mergers, there just needs to be interoperability. So think standards, think application of standards, and think digital. That at practical levels probably means things like real focus on getting passporting regimes working. It also means very intensive collaboration. Hey, we've got this set of analytics that, it tells us about non-compliance in this sector. Who else amongst our brethren regulators needs that framework? Let's share that information. Let's collaborate on those enhancements. Collaboration is going to be key. And through that collaboration, you can create virtual scale, in my view.
Mirna?
License passporting is the key. I think without license passporting, there's going to be micro fragmentation, not even fragmentation. It doesn't make sense for a company that got a license in one market to start from scratch in another market, with all due respect to all the little details that are specific to this particular market. So I do encourage regulators to learn from each other, learn from the mistakes of the world. I mean, we're lucky that the world is ahead of us in so many ways by at least 3 to 5 years. So let's take advantage of that. And we once had a training session with the UASA, and these things are amazing. When you bring the whole ecosystem together and you start learning from experience, the AMF does a good job as well with that. But really, license passporting, at least if I'm licensed somewhere, give me half the way, just save me half of the effort and let me start from an advanced stage. And back to the standards, unifying the standards, this helps a lot.
Ahmed.
Just to add to the valuable points mentioned by my colleagues, I think harmonizing the regulatory environment is very important. I can see a lot of variances in terms of the advancement between one market and another. I think looking to harmonization across the board is very important between at least the basic regulatory framework across the capital markets. Licensing passporting is important, but also listing passporting is also something more important, enhancing and looking to the quality as well across the market itself. So if I am a listed company in one of the Saudi markets, why don't I be listed immediately in any other markets in the GCC or in the Middle East itself? That will be expanding, the investors base across the region itself. And the last but not the least, since we are talking here about the AI and the technology, I think between the capital markets, there might be a unified digital regulatory framework that can enhance the infrastructure, can license digital accelerators in the capital markets itself to develop the skills and the culture across the entities, because the future is for the technology as well. And it becomes not like an objective, it becomes like an enabler across the markets.
Okay, last but not least, I wanted to say something on the AI point, is that regulators do have a role to play here, but it's not just financial services regulators. There are going to be others involved. There are going to be data protection regulators involved. So it's not just financial services regulators that need to consider this. But I think a real theme of today is about cooperation and engagement and learning from each other. And that's something we've really learnt on our crypto asset journey, going to other jurisdictions, learning what they've done, learning from their mistakes, being able to get ahead quicker because you know what to expect.
Thank you very much. Please join me in thanking my fantastic panelists and also join me in thanking the organizers of this fantastic event.